Good morning, good morning, good morning, good morning. Welcome to Alexandra and Friends at the Purple Cow Branding Studio and the meeting place in Farmers Branch at 13612 Midway Road, number 601 Suite. And we're here the first and last Saturday of every month. And don't you just love our studio? We have an amazing day today. And our sponsor is Mr. CEO, CFO, Rob Liz, who has turned this beautiful building into one of the most, I call it the magical building, because you can be in the meeting room, you can be in the studio, you can be in the podcast room, you can be in the tree house room, and then you can also be in a building, office building.
Don't forget the library.
Oh, and the library. That's where our studio is, in the library.
Yes.
And we have an amazing producer today who is filling in for Michael Clark. Michael Clark is our producer, but he will be our co-host today.
Yes, so exciting.
So excited. So let's start our show, and then let me welcome everyone here. But before we do anything, Michael, since you're kind of our co-host guest today, would you start with our prayer?
I can do that, yes. Dear Heavenly Father, thank you for allowing us to gather this morning and for all of the benefits that you're going to give us from the things that we're going to learn from each other. And we pray that you take us back safely to our homes later this afternoon. In your name we pray, amen.
Amen.
Yeah. Shabbat shalom to everyone today too. Thank you very much. We have an exciting show today. Every show we have is exciting, but this one, last show we had was about Medicare. Well, today we're going to move from Medicare to mortgages, because that is one of the most tragic situations this year, because our interest rate is so high that our homes are just sitting around. So we have an exciting guest today. So before we do anything, let's take a moment for the Pledge of Allegiance, okay? That is by the Clark family, the young Clark family.
I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
I need to get them to record a new one.
Yeah, but
that's several months old now, but yeah.
But Michael, that's so amazing for them, because every time, actually, by the way, I want to tell you today, our donuts are sponsored by AAA Lamar Clark. He was so enthralled taking of our podcast, seeing our information on LinkedIn, which is number one for Mr. Rob Liz, who is our sponsor. That is very important to learn about all of the marketing on LinkedIn. So this is very important, because our show, people look at it. This morning they met me at the donut shop to buy our donuts for here. So I'm excited. Thank you so much. We need to start getting y'all to come and do some advertising with us too, because we need it. Because Rob Liz is going to throw us out if we don't pay him soon. Thank you so much for being here today. This is Alexandra and Friends. We talk about our topics are about life, health, wealth, and love. And we bring a little bit of everything to our show. And sometimes we cry, sometimes we laugh, and sometimes we wish, why did we bring that person on the show? And that's pretty rough. So let me, with further ado, today Michael Clark is filling in for Elena Glassman, who is our co-host, who is in Hong Kong. Welcome, Michael. Michael is with 660 The Answer. He is the producer, director. You just got promoted, right, Michael?
Yeah, you just promoted me just now to director.
Oh, well, if you get fired, I'm sure Rob will find a place for you.
Yeah, thank you very much. I am appreciative of the chance that I have to be co-host for you today.
Well, because we have a great producer by the name, it produces every item at the Purple Cow Branding, the meeting room, the everything, right hand for Mr. Rob Bliss, right? His name is Antirian G. Am I getting closer?
Mr. G.
Mr. G. We call him Mr. G. He's the most amazing man. G. Yes. So this week we have we're a little bit short on our Rob. Michael is filling in for Elena Glassman, who is in Hong Kong visiting her mother, who hasn't seen in a couple of years. So we're excited. So Marshall, how are you doing?
Well, hello.
Good to see you.
Wonderful. I'm wonderful. How are you?
Don't you look? This place gets better every day.
Oh, it's
so
going
exciting.
It's a great thing, though. At least the people have a place to go and be comfortable when they come to share what they do. So I think it's great.
Well, the greatest thing is when you come in the evening and they're using our stage for this amazing events, you know?
Yeah, we love to share.
Yeah, we love to share, you know, especially, you
That's
know,
what it's about.
that's what it's all about.
And
So
you know, Marshall Johnson is an author.
that is correct.
She
And her
wrote
book
she
is,
wrote the book Shortcuts and Practical Ways
Come
to
on
Whip Your
now,
Husband into Shape.
that's right, that's right.
That's how you do that, right?
And Michael bought the first book to give it to his wife.
Yeah, a long time ago, but I wasn't the first
It's all
one.
right. It's all right.
Her book is sitting right up in one of those little
Yeah.
cubby holes up there. Wow.
All right. we
And don't
appreciate
forget that Elena Glassman also is an author.
Right, and you can search for both those authors on
it.
Amazon.
No, that's right.
Amazon.
Elena Glassman and
Mhm.
Marshall Johnson.
Or you can come to Purple Cup Brandy,
Sure.
to the library, Rob's library, and sit here and drink a cup of coffee and join the membership, because he's got some great memberships too. It's sort of like Starbucks. You can come here and rent your table for a couple of hours.
You know,
or-
Alexandra, you missed something during
What's
the
that?
intro. When you were telling them where we are, you forgot to mention the great state of Texas.
Oh,
That's
You
right.
just said Farmers Branch.
Oh,
Now,
that's right.
not anybody from anywhere else is going to know where Farmers Branch is, really.
Texas, that's exactly
Yeah.
right. Well, you know, let's try and get to the gentleman that's here today visiting with us, because that's the exciting part of this whole show is our guests, because they come from all walks of life and they all have a story. And that we've been sharing the stories now on our 4th year. October will be my 4th year, and I counted we have 212 podcasts.
I think you may be off a little bit, but we'll look at it.
Yeah, I'm a little bit off, you think?
I think you're a little bit off. You're exaggerating just a little.
Just a tiny bit?
Yeah,
Yeah, count
I'll go
them.
back and count.
Yeah, I'll count them again.
I will.
that was
Okay.
hilarious.
Yeah, but we're pretty close to that.
I'm the keeper of the audio, so I know.
Okay, I think, well, you better count them, okay, because that's what I counted, because I think I counted twice, maybe.
Maybe.
And I celebrated 2 years being on the podcast.
You
this month.
celebrated, yeah, we're 4th year in October.
years.
October the 1st was when we started, or that first week, yeah, with an amazing group at 660 The Answer, and I still love that radio station, and I'm still listen to it 24/7. So, well, let's take a little bit of a chance here to introduce. This is Alexandra and Friends. We are on Facebook, alexandraandfriends.com, Alexandra and Friends. Wherever you look at, you'll find
On
us.
YouTube.
On YouTube.
All
Oh, and we
platforms.
have YouTube. So if you want to advertise,
Mhm.
even if it's your business card, please let us know, because that is the most exciting part of it all. And that was created by Mr. G. Mr. G and his assistants, which is amazing. So we're very excited to have our YouTube going. So Marshall, you want me to take the opportunity to introduce
Yeah,
you?
won't you do that? Because I want to hear more. I'm sure you have a little bit more to share with us than
Oh, well.
I had read.
Buenos
So we can
días
do
para
that.
todos, buenos días, ¿cómo
Yes.
están? So I'm going to bring a little bit of touch of Latino
That's how you
taste
do
here.
that.
Buenos días, Marcos Rincon. I'd like to introduce one of the greatest loan officers that I've known for many, many years, who has made me famous because I've been able to close all my loans. I mean, that's how you get famous. To have a good, wonderful, reliable loan officer. Good morning, Marcos.
Good morning.
Would you introduce yourself and tell us who you are, please?
Well, I am a loan officer and now branch manager at Canopy Mortgage. We're a mortgage bank, so we make all the decisions in-house.
Wow, this is Marcos Rincon. Marcos Rincon goes back a long time. His story is going to tell you a little bit about how actually everybody talks about HUD and financing, but HUD is a kind of a word that not very many loan officers today use. So I'm excited. I wanted to bring a little bit of the mortgage world to y'all now, because we're having so many issues on what is points. Well, how do you lower your interest? What is your refinance? Why are people still buying homes, but the mortgage, the interest rate is
rates
so
are
high?
Mhm.
Well, one of the reasons is because they have programs where you can reduce your interest, you can refinance. So we're going to talk a little bit about all those things. But I want Marcos to tell us a little bit about him, how he started, what is HUD, when you started the programs for HUD, and what was why you started what you're doing.
Well, after my multiple careers in my life, I kind of stumbled into real estate by accident. One of my best friends, Hector Flores with National LULAC, asked me if I would help the organization form a housing program for National LULAC.
Now, is that LULAC, the LULAC?
League of United Latin American Citizens.
Okay.
They're the oldest Hispanic civil rights group, comparable to the NAACP.
NAACP,
Okay.
okay,
And I've been
okay.
around for a long time, they're national.
Mhm.
And so I felt very complimented he would ask me. And so I did my research. I said, sure, I'll do that. So one thing led to another. In 3 months, we had a new organization focused on housing programs for Hispanics.
Now, when you say for Hispanics, was that because of the organization that started that program? Is that what it is?
Primarily, in general, all people need help in
Okay.
housing.
Absolutely.
But there had not been a visible national group focusing on Hispanics and opportunities for buying homes.
So Marcos, let me just go back and say, your name is Marcos Rincon, and who are you with, and what is the name of who you work for, and what do you do?
Okay, I'm with Canopy Mortgage. We're a mortgage bank. And the difference with the mortgage bank, mortgage broker is that we make all the decisions in-house to underwrite a loan.
Oh, wow, so you don't have to send out
Exactly.
you don't have to send out the package to
some-
get it
Approved.
approved, okay.
So we have been in business about 20 years. We're a medium-sized mortgage bank. That's all we do is mortgages. And just starting a new branch here in the Dallas-Fort Worth area. And this is my second month.
Oh, well, congratulations.
Yeah,
Congratulations.
congratulations.
Marcos, are you married?
Yes, I am.
Oh, and who is your wife?
My wife is Miss Elizabeth.
Oh, and I see her over here with our guest here today. And Miss Peta, I believe she's from Hawaii, is that correct?
Actually, she's originally from American Samoa and been raised and grew up in Hawaii.
Oh, she's a gorgeous lady, and I understand she knows how to do the hula hula.
Oh, yeah, she does that.
You know, the hula hula is the Hawaiian dance, right? Is that,
All
yeah.
right. She does all of it.
Yeah. And you have children, right?
We have 3 daughters, and they're all grown. We have 6 grandchildren.
And they compete with me. They're realtors also.
One of them.
One of them, yeah, they compete with me. So I have to all the time. What? You can't have my client this way. You gotta go this
No,
way.
but I only work with you. I don't work with her.
Oh, you see?
She's too intense.
Well, it's so good to have you. Well, let's talk a little bit. I want to dwell into the mortgage business because that's what it's killing our interest rate is killing our business right now. We have so many issues, but real estate is the name of the game. That's what we do. Tell us a little bit about what has occurred in the last couple of years and where we are and what do you foresee?
Well, that's a big story. And it's common knowledge that interest rates are high, but for most people, they think that because interest rates are high, they cannot get a loan, or they cannot qualify for a loan, or can't afford a loan. Affordability varies from person to person, but what I do is I figure out what they want accomplished, and most of the time they want a monthly payment that's within their range,
Okay.
in their budget. They want to have funds to close with that's within what they can get together, and basically can buy a house. And the people that shy away from buying a house today because of rates, they're not focusing on the really good prices that are in the houses today. And a lot of sellers are anxious to negotiate price. And says, well, prices are good, but interest rates are high. I said, yeah, so I'll wait till next year. Says, well, what's going to happen almost as soon as rates go down, prices are going to go up.
Prices are gonna go up.
So you might save a couple $100 a month on your monthly payment by waiting, but then the sales price is going to go up 10-20% next year. So you've lost what, 20,000, 30,000 to the sales price.
So how many loans are there available? You have that VA, which is for veterans. Tell me about the different programs you have.
Well, there's what I call the traditional loan programs and the non-traditional programs. The traditional ones like, excuse me, like FHA, VA, conventional loans, USDA loans. They're traditional loan programs where you can get good financing, you can get a low rates, low down payment, and mostly flexible terms. Now, a lot of people don't qualify for those because they have other issues with income or credit or funds.
Or self-employed, right? 1099s?
Well, self-employed, but self-employed, usually they can qualify, but many of them do not. They claim too many expenses on the taxes, and because of that, they can't qualify on their income. So, but there's other options for them. So basically, what I do, I interview the customer and figure out what might be the best fit for them, to accommodate their goals. And sometimes they're unrealistic, so I bring them down to earth. I simplify the process because a lot of people have a lot of misinformation. They have people tell them, well, I got this 2% rate last year. Of course, they weren't available last year. And so on. So they're filled well as advertising and influences, and they're confused about what to do.
I had a question. I also heard about ARM. It's some kind of program that when you get a home, it's called ARM. I don't know, I'm asking you about it, and then something happens, and then they could lose their home because I think it's the taxes that go higher
Interest, the
up on it,
interest
the
rate.
interest rate.
It's an
Okay.
yeah.
So do you also educate the new home buyers about that program as well?
Of course, of course,
Good.
and because a lot of people have the misunderstanding that
Mm-hmm.
ARMs or their adjustable rate mortgages, that they're harmful to them. They're not harmful to them if that's what your best loan is.
Okay.
Because an adjustable rate mortgage, all it means is going to adjust for so many years. Like, for example, if you get an ARM, a 10-year ARM, then it's going to be fixed rate for 10 years. Then after the 10th year, it might adjust. I said might adjust up or down, but you already know ahead of time, and there's limits to what it could adjust to. All right, so it's not that it's a harmful loan. No, it's beneficial for someone who does not plan to be in the home more than 5 years.
Okay.
You might want to take advantage of a lower rate and more flexibility in the mortgage, and instead of having a permanent payment for 30 years. And so it doesn't apply to everybody, but in some cases it is beneficial.
Talking about ARMs, so because right now I see that the jumbo loans have ARMs and they start like at 3%, 4%, 5%. And they look like the adjustables are every 3 years. Is that something you're
It's
seeing
the same
more?
principle, but I wouldn't go down to 3%. 3% is extremely low rate for anything.
For anything,
Yeah, so, yeah, the rates are still hovering around the 7s, maybe a little less than the 7s, but it depends how much down payment and credit score.
So let's talk a little bit about credit scores, and I think, Michael, that's something that probably you might jump into a little bit, being that let's say young couples of today, if they're refinancing, what is it that you're looking for on a client? When they come and visit with you, what does the client need to do before they come to you?
Well, before they come to me, they need to give me a phone call so I can screen them on the phone to see that what is it that they're interested in doing. And I'll ask them some questions to screen them: income, credit, funds, and what's their purpose. If it's to refi or to buy another house, whatever their goal is. I try to screen them over the phone before they come visit. So when they come to visit, we already have an application, they bring in documents, already pretty much pre-qualified them already. But before they even visit, they don't have to even come and visit. Most of my customers, they're all over Texas. I never meet them in person until closing day. But in the meantime, try to make it as simple and as efficient as possible ahead of time. So we go as far as getting a customer approved by an underwriter before they get a contract on a house. That way, people who are doubtful or stressed over getting approved at all, we get them approved ahead of time.
So you skip the qualifications, right?
We don't necessarily skip it.
Uh-huh.
Some people say, look, I already found a house.
Okay.
I need to get qualified but today to make an offer. And we can do a pre-qualification, but a pre-qualification that's real. I verify everything before I even issue a letter. So the pre-qualification is the initial review and approval by an underwriter. That's like submitting a loan for approval, which it is.
Right.
Minus the property.
Okay.
So that way people see the numbers, they don't have to guess about it. They say, well, I'm a lower monthly payment. Okay, well, I can adjust that. This is how. And I don't have that much money to give down and all that. Well, these are options for you. And to make you feel like, hey, now I can, not only can I qualify by talking with payment, I also had a full loan approval before I even start looking for a house.
So how long that usually take you to
Great question. Great question.
Yeah, pre-approved per family, when it comes down to making sure you are guiding them to the right place they want to be.
A
How long
day,
did it
a
take
day,
you guys?
a day or two.
Day or two?
We're really good at it,
Uh-huh.
and as long as the customer responds quickly,
Mhm.
we respond quickly.
I like the way you stated that you there to help them, to get them to a better place, reference to their credit not being in that level. Also explaining to them the different type of loans they are about to get into, because what we find out about when you get ready to buy a home, it's not been explained what you're getting into, and it's a very detailed and precise to make sure you understand what you are applying for. And there's no surprises, because so many people are getting like, oh, I got this certain loan, and then 4 or 5 years later, here comes a new price, and my house note goes up with the taxes. It's all a surprise to them. So kudos to you that you take the time to make sure that they understand, and you're giving them good information of guidance of what you're doing.
Well, it's absolutely necessary
Mhm.
because number one, you don't want a customer to go down the road and get the week of closing, they
Mhm.
get canceled for any reason. That happens a lot, by the way.
Yeah,
A
I
lot,
believe that.
you know. I've had a guy canceled a loan after he had gotten his keys after closing.
Oh, wow.
On his
my
way
goodness.
home,
Oh, wow.
and call him up, we canceled your loan. Why? It was not a really good reason, but somebody messed up in the beginning.
Oh,
And then we picked them up and closed them in 2 weeks. But this happens a lot. A lot of people go to banks and they're not talking to the same person all the way through.
Mhm.
And they don't get a
Mhm.
thorough review upfront to make sure they verify their pay, their taxes, credit, all these things ahead of time. Some will even issue a pre-qualification letter just over the phone without any type of verification. And that's wrong, because that letter's not worth much. When it comes down to it, you spend money and time, and the family's all excited about buying a house, and then you get told that you don't qualify anymore.
that's
Or
very
get
tough.
denied, and that's just, I mean, my first family that I had when I first started had been denied by 4 banks.
Wow.
And when it came to me, they said, the lady at it was History Maker Homes that the sales lady said, can you try to help these guys? And I said, well, let me try. So I figured out in 2 hours after I got everything what needs to be done. And it took a month to get everything ready, and then I closed them. And really, it's whenever you get a loan officer, they got to be wanting to help you.
That's number one.
They have to have a lender who's flexible enough to give that person the time and support to help that person. A lot of the bigger banks, you're just a number. They have their production goals, and they don't want you to waste time with people who are not ready, right? So on the other hand, where I work, we take all the time what we need on the customer. As long as the customer is serious about getting things done, no matter what the problem is, there's a solution to everyone.
So let me ask you a real quick question, Marcos. When one of the biggest things is the cost to do it, to really, when you apply for a loan, there's a lot of cost to the buyer, which some of the buyers sometimes just don't have the money to work with it. And what are the actual costs that you require from your bank? You need an appraisal, you need a credit report. These things are necessary. Tell me a little bit about what are the essential parts of when a young person like Michael maybe comes to buy a home or refinance. What do you require to fund? What are the first things that they require to have?
Well, first of all, I explained the whole process from beginning to end, number one. Number two, how much out of pocket will they have to
That's the number one.
have when they start? And it's really simple. It's not that much either, but it's some people have to get the money, right, prepare for it. But you can get help from all kinds of sources, and that's why I advise them. Number one, when you're ready to make an offer on a house, you're going to expect to pay earnest money, like a deposit, normally like 1% of the sales price. If you're getting a $300,000 house, you need to be able to pay $3,000. That amount gets credited toward the purchase. Or within, say, the option period, if you decide to change your mind, you get it all back, right? Within, say, 7-10 days. And if things go well, the next thing you're gonna do is order an inspection. And that's gonna cost about $300-350. And that's to make sure that everything in the house is operating. And to give you an idea of how much life it has, like the AC may only have 2 years worth of life in it. And you're gonna have that expense later on. Or if the roof there needs to be some attention, or you need a new roof. Things like that you wanna know within that initial period, that week. And then if there's something that
And we call that the option period.
option period, and if those things are brought up to the seller and they're willing to address those issues either by repairing them or to give you a credit, so you can repair on your own, then that's $350 well invested. So now you're at $3,000 for deposit, and then $350 for the inspection. The next thing will be an appraisal. Once we get the loan started, we'll order an appraisal to make sure that the house is worth the sales price. If the sales price is $300,000, the appraisal has to determine that it's worth $300,000 at least.
And that's what the bank actually loans on. It's on the appraisal value.
It'll be
right?
based on the appraised value. And so if the appraisal comes in short at 280, then the difference would have to, normally the seller reduces the sales price by that amount, usually. All right, it's negotiated. Secondly, if the price comes up above 300,000, then you're fine because you have a fixed sales price already. And that's it. That's all the expenses you will see before closing.
Oh, I've got a couple. There's a couple other expenses that I've had experience with. You may also need a termite inspection. That's another $400. If you're buying a 112-year-old house or something like that, and it's up here in beam, you're going to want a termite inspection and maybe a mold inspection. So that's another $400. I've owned an old house.
Well, the inspection report will show what's needed.
It should.
No, it will, and it will. And if it's needed, termite inspection, and FHA requires it.
FHA requires.
But all the costs for repairs, that's a negotiated item. But
Right.
the direct out of pocket, that's not included any kind of repairs. That's what I mean.
Right, as a loan officer,
Yeah.
that's what you
So
expect.
everything else, the inspection can determine that the foundation needs to have an engineer's report.
Sure.
Because the engineer report determine if structurally the foundation is solid or not. And they'll give you an estimate of what it will take to repair it. Now, that's an additional thing, but
Right.
it results from inspection. When people skip the inspection report, that's a really bad decision.
Oh, yeah. I
Yeah.
agree.
Absolutely,
Right.
absolutely.
But basically, it comes down to the
Yeah.
three things that you mentioned: the
Yes.
earnest money and the inspection
And the
and the appraisal.
And that's it.
Right.
That's it. And everything else will come out as a result of inspections or
Yeah.
appraisals as well.
So I've got a question about just the market in general for the home buyer today. What do you think is the biggest impediment to people purchasing a home? Is it the mortgage rate, which is historically low right now, actually? When you compare it to 1984, when my parents bought their house, this rate is very, very low.
18%.
Yes. So is it the rate? Is it the cost of the home, which has gone up, like 50% in the past 5 years or so?
Yeah.
Or is it the insurance? Because homeowners insurance has gone up 25% in the past 6 months.
Yeah.
From my personal experience.
Yeah.
So what do you think is the biggest impediment to people buying a home right now, cost-wise,
Or refinancing.
or refinancing?
Yeah.
I think it's misinformation.
Okay.
I think that a lot of people are bombarded with inflation, scary inflation,
Okay.
that the rates are just crazy, that people can't afford it. Less people can afford to buy a house. There's unemployment, all these economic factors. People get bombarded every day,
Mhm.
and they're negative factors as well.
Mhm.
So someone who wants to buy a house and needs to get out of that $3,000 a month apartment rent,
Absolutely.
and they're going up higher and faster, right?
Yes.
Right, so they have a lot of pressure to make ends meet, get out of that apartment lease. So, and get a house, and you would be surprised how many pay less for mortgage than rent on an apartment, right? So, but I think misinformation is one. But the solution is that they don't get the correct information that applies to their situation.
Okay.
Now, in some
Okay.
cases, I get a lot of people say, well, my budget is 2,000 a month for mortgages. Why do you set that amount? You're making $200,000 a year. So why is that amount your budget? Says, well, that's what we're paying an apartment that we'd like to pay. But you want to buy a $500,000 house, that's not going to work. It's going to be higher than that. Why is it? What we have with the bills? Well, let's look at the rest of your bills.
Yeah.
Why don't you pay down this and pay
Yeah.
down that, pay off the car, you have a low balance, and then you can afford to say a $3,000 a month mortgage payment versus 2,000 a month. It's not going to get you a $500,000 house. It's not, right? So I think everyone needs to have get a solution customized to their situation, you know. And the rates are high, interest rates are high, but the prices are low, reasonably lower. And compared to the alternative, renting is the
That
alternative,
is very.
or living with mom and dad, you know, that kind of thing. That's not always a good alternative either, right? So, or they have a growing family.
Mhm.
You know, they have kids coming around, but the kids are at an age that they need a yard, they need a better neighborhood,
Mhm.
you know. So all these things factor in. I bring all the things in the full picture for them. Say, how do you make a decision to buy a house now versus next year, or stay in an apartment? So I try to customize options for them to consider and address the issue, the financial issues that that's affecting their decision. I try to point that out and see where we can work within that figure. And maybe they can't get the $500,000 house this year. Maybe you'll get a $300,000 house this year. And then in a few years, you get your bigger home, you know, but the rates go down, et cetera.
Yeah.
And besides that, rates today are around 7. They won't be 7 next year. You can refinance. I expect them to come down to 6s next year.
Mhm.
This year, it'll go down a little bit, but more next year. But I'm being told that by year 2026, the market's going to be really, really strong. So those are my customers, and I have a lot of customers buying now. They're getting 7, even 8% rates.
Mhm.
Some of them, they're on their way to refinance when it makes sense to refinance. In the meantime, they've adjusted their whole budget for that monthly payment, right?
Right.
I don't think it's, I have a challenge in reference to refinancing. I don't know why I'm so afraid of that word.
Why?
It's good to know.
It's,
What do you
yeah, because it's not really, I don't know what it would do for the future plans that me and my husband have reference to getting another home. I don't know too much about it, so if you don't mind, can you give me a little bit to give me an understanding how to refinance?
How it works?
Yes, how it works.
Well, there's reasons for refinancing, and a lot of people commonly think that when the interest rates go down by 2%,
Mhm.
there's a time to refinance, which is generally true.
Mhm.
However, you still have to qualify for that, right? So everything else has to be in order to qualify for that loan.
But it's smart to refinance when you know you're moving. Can it affect your loan to your next home?
No, it might
No.
improve it. It might improve your chances.
Oh, really?
Yeah, so there's
Okay.
other reasons why people refinance, by the way. Some people are, maybe they had a co-borrower, co-signer who wants to get off the loan,
Okay, I
or,
didn't know that.
yeah, and that's the only way to do that, to get
Oh,
them
I
off
didn't
the
know
loan,
that.
right?
Okay,
And there's people that are going through divorces,
okay, I
right?
can see
And-
that.
And part of divorce is that one party gets the house and the other party will get paid off. So you have to, then the one party decides they want to keep the house, so they have to do a cash out, refinance, to
Okay,
pay off their portion to the other person,
So the
right?
cash out, is that a HELOC?
No, a cash out refinance, let's say you have a house that's worth 300,000 and
Mhm.
you owe 100,000. Well, that margin, that 200,000 is your equity, more or less. And you can borrow up to 75% of that equity. So as a cash out. Of course, your loan will be back to the
Mhm.
full loan amount, but that's going to be a totally new loan. So in one case, I have a guy who has a 3% interest rate and wants to cash out
uh-huh,
the house. I said, well, you're not going to get that 3% rate.
Right.
You're going
Right.
to be the new rate. However, if you do get like an equity loan
Uh-huh.
or a standalone second, which doesn't affect the primary loan, you can get that too, right? So that's a different kind of loan, but those are different options that they consider. But a refinance, we have a lot of people that would have a home and they want to buy a new home. They don't know how
Right.
to get that done. All right. Well, there's a number of ways, and I coach a lot of people what they need to do and what options they have to see what is they choose which option they want, best fits. I have a lot of people moving from out state to Texas, California, of all places, right?
I'm sure.
And they're working over there and they want to move over here. So how do you qualify over here, being working over there? So I coach them on what needs to be done I can pre-approve them based on certain things. So when they're ready to move, they're ready to get a house over here. So there's not necessarily a waiting period. So that at least answers your question.
Thank you. It
But
did.
for
Thank you.
everybody, that's what I'm saying. That everybody's solution is unique.
Yeah.
That none's gonna be the same,
I believe
and every family is different,
Mhm.
and every partnership is different. So you have to
have to find
include both. If it's a married couple, partners, both of them, they have to know. It can't just be one party and
That's
then
right.
keep the other party
That's
out. No,
right.
they both have to know
That's
and
right.
be involved in the decision and
That's
commit
right.
and commit. And once they say, look, is this the plan you want? Yes. Then that's where we're gonna go.
So we refinanced 4 years ago
Mhm.
in the middle of 2020,
Mhm.
with all that craziness going on, right? And the rates were still low then. And we refinanced from a 30-year mortgage down to a 15-year mortgage. And we got about the same rate, maybe a little bit lower rate on that. And so now, 4 years later, we've only got a less than 11 years to pay on our house now, instead of instead of
Think about
20-something
it like
years.
that.
Yeah, because the prices, I mean, the interest rate was so low, it just made sense.
Yeah.
The monthly cost for us didn't go up, but very, very little.
Interesting.
Yeah.
Yeah.
It was a real benefit to us.
Yeah.
There's just and also for the young people today,
Mhm.
we have a lot of grants, right? If you have young people starting their
Well,
first homes,
I
there's a lot of
wouldn't put
grants.
the age in there.
Well,
Either part to
For
anybody.
to anybody.
I'm a little
Right.
sensitive about that.
Yes, I'm sorry. Well, I mean,
Well, she called me young
people-
earlier,
young-
so
young
I
people, I mean,
It's nice.
I don't really, yeah.
you
it's
know,
all right.
young people is all of us, but there is a lot of grants, and that's something that really, I know that loan officers don't like to deal with it, but it is because it's a tough project.
I think it's not that loans will not deal with, it's part of it, but it's mostly the bank.
The
A
bank,
lot of banks, they don't want to mess with them.
but there is a lot of grants
Yeah,
available
there's-
for those
there's-
people that want to start.
Well, let's put it this way. When I look at a family's financial situation, their goals, and so I figure out how much, if they're short of money and there's no other way to get it, so well, we can look at getting a grant. A grant is not always the best solution, maybe the only solution, because grants have their restrictions as well and their fees.
Okay.
And they have set interest rates, which sometimes you can get better interest rates than that. And and there are different kinds of grants too, some that are forgivable, some you have to pay back.
Marcus, will you give us your name, the name of your bank and your phone number for any of our viewers, our listeners can call you and talk to you?
Sure, absolutely. It's Canopy Mortgage.
What is your name, sir?
You don't know my name? Okay, Marcos Rincon,
It's Rincon.
Rincon, Canopy Mortgage. My number is 469-688-2818.
And he's an amazing loan officer and a very patient person because he has to put up with me. So I can tell you that. Marcos, real quick, because we're coming to the end of the show, what does it mean when a seller can pay points to lower the interest rate of the buyer?
Okay, so if you're a seller and you're trying to sell a house and it's been sitting there for like 2-3 months and not enough interest in it, one of the things I'm recommended that they offer, instead of reducing the sales price by 25,000 to 30,000, is why don't you offer to pay the points to the buyer, so they can, instead of a 7, they get a 5% rate,
Whoa.
permanent.
And how is that done on the banking
Ooh.
side?
It's not on the bank. It's
I
not the
saw
bank.
that
It's a
there.
seller. It's like a seller concession. Seller concession. They can do up to
But how does the seller get that paid? Who do they pay it to?
To the bank,
And what's that process?
We collect them back from them. We collect it from them.
You
at
collect
the
it from
closing,
them.
at the closing,
Oh.
At the closing.
at the closing.
Okay, instead of reducing the price. What's the benefit to that?
To the buyer,
Well, obviously, it's a 5%.
well, to the seller,
Yes.
they're not reducing the price by 25,000,
Right,
right? And still keeping the sales price the same,
okay,
right? So it actually costs less, but it's a marketing tool it'll attract more attention. So if you
Gotcha.
instead of 7% say, well, I can get you at 5%, I'll pay it down to 5%. Now, 5% rate is a great rate.
It's a
Yes.
great rate, I mean,
It's a
yeah.
great rate right now. So a lot of people don't understand that they can get that done anyway,
Mhm.
but it's not often thought of.
okay.
Can you do that on refinancing also, if you pay the points?
No, it's
No.
not a refinancing,
Just a new
right?
purchase?
Because there's no seller involved in refinancing. It's
But
your
if
own.
you as a,
You know, you can pay down your own
your own
points,
points,
your own points.
your own points.
But understand that the reason that it makes sense on the seller for obvious reasons, but also there's another reason is compliance. You know, if the buyer, there's a limit to what the bank can charge a buyer. There's
Okay.
3% cap.
Yeah,
So if you're trying to pay 2 points, the rate down,
Mhm.
and it's already 2 points from the 3 points,
Mhm.
then you don't have room for the rest of the cost of the loan.
okay.
So there's a limit to what the buyer can pay down
Okay.
on the loan. So, but if the seller or a third party pays it, then they still have the 3% cap. And the 3% cap, with that, the buyer can also bring it down temporarily another point or two on
Really?
top of the 2% reduction.
Wow.
Yeah. So you've heard of the temporary buy downs. You can buy 1 or 2 or 3 points down for the first, second, third year.
Oh,
And then goes back to your permanent rate, which in this case, example, would be like 5%.
Is that the job of the realtor to make sure you are aware of that, or is that the loan officer?
A loan officer.
Well, it starts with
Gotcha.
it starts with a realtor. Most of
Uh-huh.
most of the clients I get, I come from a realtor.
Sure. Yeah.
And the realtor says,
Okay.
I don't expect a realtor to know, and it's often
All
not
we
a good
can do is
idea for the
offer them.
realtor to be that
Gotcha.
explicit on the financial side.
That's what I.
But that's what I do on screening. What is it that their goal is?
Mhm.
And they said, well, Marcos, I want a lower rate. Well, you can get this way,
right.
right?
So once you know what their goal is, you can tell them what all their options are.
Right.
Okay.
Oh, yeah,
And,
that's
and
awesome.
I think the most important as a realtor, you always, you
Mhm.
want to find the loan officer that, I know loan officers that can help us with a grant, or they help us with how to get the down payment, or how to do all these items. And this is what our job is supposed to be. Of course, there's compliance, and we cannot go into it. I'm not a loan officer, but I'm always looking, hey, right now I've got an open house today that I'm offering a 2% buy down that the sellers do to bring the loan down on a $1 million home. So all these things are available, but you've got to be able to work with that loan officer or bank, because if you don't, then it doesn't work. Because if you don't give them at least the opportunity to know what's being offered.
Okay.
We're coming pretty much to the end of our show here
This
real
was
soon. I see our producer kind of going 1, 2, 3, 4. So we want to make sure. So this is Alexandra and Friends. We record on the first and last Saturday of every month. Our guests are from all parts of the world, and they all have a story. And we appreciate you being at Purple Cup Branding Studio. And we appreciate Rob Lish to give us the opportunity, because
Thanks,
this is
Rob.
an amazing, our show just keeps getting better and better. And we thank you very much. Michelle, thank you for being here today.
Thank you,
I know that
Alexandra.
we just keep growing and getting better all the time. And Michael, I know you're usually on the other side, but thank you for
Yeah.
being here today. And I hope that
Feels
everything in
great.
your home is doing well.
Yeah, and I just want to encourage everyone to, when you're on the Facebook or the YouTube, make sure you go and click on all the links that are surrounding there, so you can get more information on our show and more information on Purple Cow
Yes.
and the meeting place and everything that you need to know about our sponsors.
And I want to talk, before we close, and before we say goodbye to Marcos, I want to talk to you about our next guest. I believe it's the 27th of August. His name is Blake Lindsay, and he's an amazing, amazing guest that's going to be. This gentleman has been blind since he was very, very, very young, and has an operation has a company in Farmers Branch where 90% of his employees, what I'm reading here, are also blind. And what a story that he never gave up. He continued, and today he's a very extraordinary person. So stay tuned for that. We got a book, and if you want to read all about it, you can come to Rob Bliss's library, The Purple Cow, and read all about it and put the book back.
Right.
Because we need those books. Marcos, thank you so much for being
Thank
here.
you.
Next time,
Great
I want to talk a little
information.
bit about underwriters. What does the underwriter do? What happens when your loan gets to the underwriter? What if your underwriter doesn't like you and is going to stick that loan into the door? These are important things that I want to know because it happens. It does
Oh,
happen
wow.
sometimes. When the underwriter controls your loan, not your loan officer. The underwriter is the one that controls your loan. And if you don't have a good loan officer that knows how to go along with that underwriter, that loan just goes by the wayside. Marcos, thank you so much for being here today.
Awesome.
I hope that all of us can do business with you. I know that you've done a lot of business with me, and I know Marcelle's probably thinking about buying a new home or
Oh, yeah,
refinancing.
yes, I'm gonna keep the one we have, I like that.
Yeah. Well, I want to talk about investor financing
Yeah.
too, because
I
that's
do
a
all
different
those.
world. Yes, that is, it's just
Yes.
mortgages are just so many investor owner finance, all these particular things that
Yes.
happen. So we want to talk a little bit next time on our next show.
That'd be great.
And Michael, what do you have to say about all this?
I think that we need to expand our show to have a section after the regular show for subscribers only, where you can talk about all these kinds of things.
Yeah, let them call
Wow.
in,
We
let
can
them
talk
call
to G
in.
about that.
We need
So
to talk
we
to
can
T. We need to
answer.
talk to. We
Yeah,
might have to
let them
have.
call in.
Yes, we
We
need to
could
talk
stay
to
about,
our
Another
sponsor.
15 minutes to answer the questions, so.
That would be
Our
an
listeners.
absolute, oh my gosh, that is a great idea.
Good, yes.
Wow, that,
Brainstorming session afterwards.
wow,
Okay.
yes,
Yeah.
yes,
I'm all for it.
yes, I'm all for it.
Educate more. Let them
Education
talk.
more,
Mhm,
yeah.
Educate
Because
more.
that, and I'm glad you said that because I've had some calls come back from the Medicare
Mhm.
that Deborah did. And just yesterday, I had somebody send me an email wanting to know a little bit about the new laws that come in for 2025. And I gave them Deborah's phone number, but I kept thinking, these people stayed with questions and they wanted answers. And I think this is a great idea. And I think that something that, or we can have callings come in.
Yeah, I hate that I missed that. I have sisters and my older sister's 82.
Wow.
I mean, so
But you know,
my sisters
it's
need to hear these.
It's like Rob said, it saved a lot of money. And not only because you're going into 65,
Yeah.
but also right before that. So,
Exactly.
and this is the third or
Yeah.
fourth email I've had on LinkedIn or a text from LinkedIn asking me, how do we know more about this? Because we heard the show. So I think these are important things. So our show is little, but I think we can expand a little bit. We
I
need
think
to
it'd be
talk
good.
to our sponsor about that
I think
because that's
why not? Ask and it shall be given.
Marcos, is there anything you want to leave us with? And leave us your name, your phone number, and what do you tell somebody that wants to come and is a little scared about doing business because they don't know how to go?
Call me. Call me, I'll find a solution for you.
And what's your phone number?
469-688-2818.
And what's your name?
Marcos Rincon,
And what's the name of your company?
Canopy Mortgage.
Well, thank you. Congratulations on your new, and I understand. And I just want to just shout out to a very wonderful, yesterday I went to a wedding in Carrollton for one of our former city councilmen who, it was a very beautiful wedding. Mr. Poulter and Mrs. Poulter, congratulations on your wedding. I know it was a very tough day and I wish you all the best and the best medical help to both of you. I love you.
All right.
All right.
This is Alexandra and Friends.
Yes.
Thank you
That's
for
your friends.
watching, and we will talk to you next time.
Elena, we miss you.
We will see you later.
Yeah, have a good time. Bye-bye.
So I love that idea, Michael. I love that idea. Oh my gosh.
And plus that was game.
What did you think about that idea, Rob?